So we are doing this lecture on a weekday evening, and I am sure some are yet to join. However, you will be benefited by watching this, and as you know, based on our model, you have been watching video, but whenever there is a live discussion, it's always good to join, interact and ask your questions. So with the pre-scene release, these sessions, very few, right? It's not number of sessions. If you look at one session with a highly exam focused mind and learn that this is what I need to do to pass the exam, that is what matters. So this is a session like that, that will really drive you to get marks at the exam and to pass this paper, right? So I think I did, when the last pre-scene release, also I emphasize students, look here, there are few things that you need to be aware for the past exam, right? So therefore I have one slide, how examiner tested pre-scene in the last exam, right? When you prepare. So sometimes you can waste a lot of time by reading this pre-scene and attending to many lecturers' pre-scene discussion, right? But it is just a simple pre-scene. Even if you look at this time, you don't have a lot of complicated information, but some information indicate in the direction of the case. In the ලොකුවට බය වෙන්න ඕනේ නැහැ මේ pre-scene එක ඇවිල්ලා ඔක්කොම වැඩ නතර කරලා pre-scene එක බල ඉන්න නැතුව. You have to be strategic to plan your studies during this limited period. So I am not going to read para by para pre-scene, but to extract the key information that matters, that examiner can develop questions. And in this session, I will target several such questions, and I will tell you what I targeted last time, how it was tested. Also, I'll show you. That shows the credibility of this session. And that is why I said one session can make a big change, right? And now if you haven't started actively studying what really matters, when I say that, then study කිව්වහම කොහෙන් පටන් ගන්නවද කියලා සමහර අයට හිතන්න බෑ. So many books, the many accounting standards, study text, and corporate governance, ethics, right? And then sustainability standards. This is also open book, right? The new book. And very critical during this is 2025 is the mandatory adoption year. Now those things you need to be really aware, and how to really spend less time and more results, less more. So this session may be shorter than 2 hours, but the outcome is going to be very impactful. So therefore stay tuned, stay engaged, ask questions from the beginning. So let's start. Now, like I said, I don't go through pre-scene in detail, but it is hospital industry, and I have also gone through and spoken to those in this industry before coming to this session, right? Now, there are annual reports available in Navaloka, Durdens, right? And other companies, so we can easily identify some hints given by the examiner about the direction of the case study as well. So the bigger picture, just in 2 slides, if I get to now, when I now go through, you need to have what? Pre-scene with you, or make notes that really matters. And then after the session, you want to go through certain areas in the syllabus that, for example, in this book, I can tell you a page number that is likely to come in the exam. That's how even corporate governance code, these sections are going to be tested. That is the benefit of pre-scene. Having said that, if you only target pre-scene and do some selected studies, that is disastrous, because now you need to ensure that all the areas are done. So when I do the pre-scene discussion, I am doing in such a way, while number one, it helps you to directly answer certain directly link your focus, your studies to some information in the pre-scene, which is I am covering in these 2 slides. Number 2, this is also a good time to do a quick revision. And I'll tell you at the start, last time one student spoke to me, he failed, or he was not successful in ABR for several attempts, maybe 3, 4, 5. And then I told him, right, now usually this section that I am now teaching, that is corporate governance, CFO's perspective of risk, not auditing, no auditing here. Auditing කියලා ඉගෙන ගත්තොත් that is a වැරදි පාර, right? CFO's perspective. Now I emphasized in the last class also, no audit in CFO's perspective of risk of misstatement, right, and sustainability to ethics. All of that 35-40 marks is a big chunk, whereas if you look at the consolidation, other standards, that may be tough to, with the time pressure, to score. So this student told, now sir, මේ පාර නම් මම වැඩි ඉස්සෙල්ලාම පටන් ගත්තේ. Now last time case study was a telco. He said, I started with this and he got a good marks, I don't know, 60 or something, got through this time. That is the change he did, to focus on this area, because anyway you have to study ABR, there is no excuse to consolidation and accounting standard. But from a CFO's perspective, risk is a critical area, and then corporate governance and sustainability. Those are the likely topics that is going to come even in your paper, the last paper before new curriculum begins. So therefore you have to break and crack this. And this session going to give you a lot of energy to do that and ask questions, and that is the benefit of live sessions, right? So now the information, I can start, open the PDF, read para by para and waste your time. My strategy is always less more. So I have only taken the relevant information that matters. So the first 5 pages, right, talks a lot about history, how the company was started by Dr. Senaka, and it was listed with 3 directors. And then we can see from that time onward, this is corporate governance, that's why I am talking that information. You can see the page numbers. So then we can see the CEO and the chair duty split, but still there is one governance issue, please note. Although CEO chair is split, the chairman is not independent. That's the first thing you should note. When chairman is not independent, the majority of the board should be, right, non-executive. So those are very salient points that you must note, right, that at the start of the case study itself. Then the case study also talks that governance is critical for sustainability, right, and then how they expanded the company. They started connecting this lab. There's another company, Healthcare Laboratory Private Limited, and then that is then later in 2018 they acquired 2 nursing homes, Kandy and Mathura. So this is how business has evolved. And then the focus on sustainability, page number 6 and 7. Now sustainability is a likely topic to be tested, especially IFRS, SLFRS S1 and S2. Their focus in this case study is on the waste management for quality and healthcare, because why? Remember, note this point, waste is a material topic, right, or area where there are SRRO. So when I say SRRO, you should understand what is SRRO, right, in terms of S1 standard. And then in terms of GRI standard, waste is going to be a material topic. Now it tells you, okay, so you have to brush up your knowledge. There is a chapter on sustainability, there is a video on various these standards, just watch it, right? But simply material topics means the areas that matters mostly to the company as well as stakeholders, because GRI, remember GRI is about impact materiality, right? Whereas IFRS or SLFRS is about financial materiality, what matters to investors. GRI, what matters to stakeholders. In a hospital, what matters to stakeholder, for example, because of hospital, the waste, right, if it is disposed in irresponsible manner, right, the society is going to suffer. And then CFO's perspective to risk, if hospital is doing that, somebody can sue and that can come as a contingent liability or provision in the accounts. That's a CFO perspective. So like that you should be able to connect, right? So anyway, regarding sustainability, this information is in the case study. Risk to environment and public health. Now this is the point, environment and public health. So these are the key risks, and that connects in financial statement to list the risk of litigations, that is provision or contingent liability, and then long-term reputational risk as well. So that information is in page number 6 to 7. And then the biggest part, that you can expect question in the exam is page number 7 to 8. That discussion about internal controls, right? Specifically, that talks about the problem with integration of key functions. So now in this hospital, you can see that a lot of integration issues they are indicating. That is, this integration risk is a big risk, right? Especially inventory module, the procurement, patient management, channeling system. So remember, in your chapter, in your study text, ROM is about 15% of your syllabus, risk of misstatement from CFO's perspective. So one of the biggest area that you must study is fraud risk assessment, fraud risk mitigation, application of CASO framework. Those are the areas. So I would like to give you a pilot simple question in a 1 page. Write 2-page answer and you will target 30-40 marks. That's our idea, less more, right? So very specific areas you can. Opportunities, incentivization or pressure, or attitude. Attitude means there are some people, unethical things are happening, no much evidence in the case study, but unseen. If examiner gives you, you should be able to connect. So the last exam paper, I'll show you how examiner tested this piece. Then you will better understand and prepare for this paper, right? So then the other part is cyber risk, a big topic, another topic that can be tested even from corporate governance angle. If you look at the corporate governance code, there is a dedicated section for cyber risk, and it is board of directors duty for appointment of chief information security officer, and then to make sure that cyber risk assessment is done for the company and their security measures are implemented. Very important, and you can easily use the open book and write that answer. So there, if you look at this information, ERP system which has been operation without significant upgrade. Now the fact that ERP has not been upgraded means the patches have not been done here. The lack of regular system update means the critical security patches, compliance related enhancements and user interface improvements have not been done. This exposes company to significant cyber security risk and make the system less adaptable to new regulatory requirements and patient service. This has a big impact on your, another area examiner can test. Please write. One of the hot topic in Sri Lanka right now, which they are indicating here, new regulatory requirement. Can somebody use the chat and tell me what is the regulatory requirement that is very relevant to hospital in this context of systems and security? Let's see whether you are aware of that, and what are the main areas that are expected to be covered under that regulation. Let's see whether you answer that. No one answer. Are you there? Yeah. Data Protection Act, which is now in place. Yeah, Personal Data Protection Act. Why it is very relevant to a hospital? Because lot of sensitive information. Remember the word personally identifiable information, not just the birthday, not just the name, not just the mobile number, the health information is critical. Now from a risk management perspective, if this information, if somebody can sue the company, again litigation and things like that, the regulatory action and huge reputational risk from a business risk perspective. So from a financial statement perspective, it is non-compliance with laws. From a business perspective, it is a reputational risk. So remember, you are thinking about risk now. Now, new syllabus has a risk management subject. Now, risk management, everybody has to be a risk manager in the organization to look at from a risk lens. Financial statements, anyway, they are, right? More than that, the company's future matters. So, the point here is that if examiner wants to give you a question, general one question is identify business risk. Please write this question. please write this question. මේ ප්‍රශ්නේ ලියා ගන්න. මේක exam එකට එන්න පුළුවන් එකක්. Evaluate business risk. Now see the word business risk. You are looking from a CFO's perspective. Evaluate business risk that could result in risk of misstatement in financial statement. Right? So the previous point from a business perspective is about what? The revenue leakage, all of that. You know, business is losing money. The financial statement perspective, your revenue completeness, cut off, and possibility it is overstated, right? And then theft, cash, all of that, financials. Then the second point, cyber security, reputational risk arising from cyber attacks, and then potentially financially how it could be connected is that the regulatory penalties, things like that, the contingencies because you are violating, and company, even consumers can, the patients can sue. That is there in other areas as well. I'll show you as a part of this lecture how hospitals are taking care of risk management, sustainability, all of that as a part of this pre-scene discussion in a while. But now I am really emphasizing some of the information, how those information, from a different perspective, how to process this information in the case study. The other part in the case study, what they talk about, please write ITGC. These patches, security update means ITGC. So the ITGC not strong means any application may not work, and that can have a pervasive impact on the internal control system as a whole. So imagine you have control, but somebody can go and break it and make one function in control non-functional, right? So that's a huge risk. So the bigger another topic is ITGC is weak in this company specifically because these regular patches, updates are not being done. ITGC is weak, right? I hope you are making notes on these very important points. And continuing cyber risk in next page, right? Especially page number 8, last two paragraph. So please go to page number 8 in the pre-scene and last two para. Says, the absence of real-time integration, now this also we spoke earlier, integration with modern payment gateway results in delays in confirmation of online-based transaction. Now this payment gateway, especially, banks, when you have online portal, right? So through credit cards, there is a credit card gateway, payment gateway, you link these two systems, but there is lack of integration to track those transactions, right? So therefore, payments need to be manually cross-checked with the bank statements, increasing the mismatches and errors going undetected for longer periods. So this is again another big risk which connects to our previous discussion, right? The relevant balances and transaction, revenue, cash, right? Because in hospital, those are not receivable, right? I mean, the receivable may be less, like I said, for the cutoff, and there will be some amount of receivable, but largely there is a significant amount of billings that happens where the cash has to be collected whenever somebody, make an appointment, you get cash, right? So that one, lack of integration between ERP and patient channeling module and billing. This is the next big system where I spoke about inventory. This is an area where misappropriation of assets can happen, right? So some of the issuance of medicines may not be billed, right? So that is from a assets perspective. And again, it will impact the revenue recognition when it comes to not consulting, but the medicines. For example, the case study clearly given, consumable or pharmaceutical issued during appointments are not always automatically captured in the financial system in the real time, requiring subsequent again manual adjustment. This fragmented process often leads to discrepancy between service delivery records, right, stock level and revenue recognition. Now you can clearly identify inventory, cash, revenue. They are the key account balances which are affected by the risk that we discussed so far, right? So therefore, finance team has to rely on manual intervention, lot of manual work, right? Spreadsheet, offline approval to bridge this deficiency, right? And especially weak audit trail. So what this, and specifically they say, if not, right? Page number 9, first para says, go to page number 9, very, very important paragraph. If not addressed promptly, these internal control failures, right? Control failures as well as technological deficiencies, that is where ITGCs are weak in this company. Remember, ITGCs are very important to mention in your answer, right? Because why? ITGC has a pervasive impact on other controls, right? This exposed to a potential cash losses, inefficiencies, and even reputational risk, because the incorrect billing, customer complaint, that is more from a risk management lens. So this part I already explained to you. So what are the possible exam question? One, I told you, evaluate business risk that could result in financial statement. Then evaluate fraud risk, or you are going to do a fraud risk assessment, and how to do that, can you guide, right? So things like that. Then, and then another thing in this case study, the internal audit function, very important function for audit committee, there is no mention in at all. Do they have or don't have? Ask that question, please write in your notes, where is internal audit, right? And what are they doing? Why can't they identify these things? Should they wait till external auditors say this? Right? Then what is the role of audit committee if all of this happens? Whether audit committee is competent? Those are big questions to ask. Right? So with that, if you come to audit committee, Bhuvanaka da Silva is a FCA. That's good. So you know, according to corporate governance, audit committee should have 3 at least non-executive. The chairman has to be a member of a recognized professional body. Yes, that is satisfied. And also the new code says at least 1 member of the audit committee should have recent and relevant financial literacy. So the latest accounting standard, whether there is anybody who is up to date, that question still you can ask, right? Whereas Bhuvanaka, is he up to date, and is there another member? Because the next member is independent legal practitioner. That is good to have this combination, but who is the next member? Is there another person? No. The case studies, sorry, the corporate governance code says you need to have 3, right? And the chairman and the independence of these directors, right? So those, sometimes pre-scene will give you more information. Be prepared for those. And then Healthcare Candy Hospital Private Limited. Now there, Sunil Gomez is an independent director, right? Assume the role of CEO. So now the moment Sunil Gomez became a CEO, we can't say Sunil is independent, because he becomes an employee of the company, cannot be independent. Please note that point. So that raises a question about whether there are adequate independent directors from a corporate governance lens. Look at the full board and see when the CEO and chairman also, although it is split, chairman is not independent. So in that context, you need to have majority of board members, non-executive of them, to have the significant, right, 1/3, the required number of independent directors. Now, one director is not going to be independent. And also remember, some of these directors may exceed, from a corporate governance perspective, their age limit. That is another condition brought under new corporate governance code, right? Directors' age, when they exceed that, again, that is an impact in their independence criteria. Then, now this is a very important slide that I am using case study information to analyze business risk and financial risk impact. So I have structured this as a table. If you look at from the case study, page number 9, please go to page number 9 and see this business risk I am analyzing to see what is the impact, right? Now one of the business risks that is discussed in page number 9 is substandard medicine batches enter in the supply chain due to legal regulatory enforcement. Now the substandard medicine was a big topic in Sri Lanka, and you know, even politicians are in jail. Now, when substandard medicine comes in, that is a huge risk. One is patient safety is top risk, and then that is impacting reputation of the hospital. So that is this, and regulators can take actions. And procurement is another very important area for a hospital from a risk perspective, and then quality assurance process, whether the patient is properly treated. Now, in addition to audit committee, if you look at in a hospital, there are other committees like ethics committee, right? And I'll show you those things when we looked at some of the company's actual information, right? So why this is important? Because this business risk can have a direct impact, right? Now, if you have a problem with your supply chain of medicine, there will be disruption in treatment protocols, right? Treatment can be delayed, patient's recovery can be affected, and then increase readmission, right? All of this can happen. And finally, remember how it could affect financials. One is your revenue is dropping. That is again a business risk, but from a financial angle, so the chances that patient can sue, right? So those are there. The other area is talent risk. So I'm saying risk and the impact of those risks, right? Rise in demand for quality care while contending with a short skill of medical professionals. So that create difficulty in getting new people. The other big risk is regulatory risk, right? That is because why regulations happens. One is the importation of medicines, right? So one, regulatory uncertainty, foreign exchange limitation, that can impact their ability to import medical equipment as well as essential drugs. In a competitive environment, that is really impacting them, right? So as a result, what will happen? Their financial performance will gradually deteriorate, right, with the particular stresses on its regional hospital that are yet to achieve sustainable profitability. Now, if you look at the balance sheet and P&L, do you have prior year or only current year? So they have given only current year, right? The group accounts column and the company column. So over a period, we don't know how they are growing, right? So, but imagine with this information, it suggests that there is competition, the problem, so there is a chance that revenue may drop. That itself can create, go to fraud triangle, the pressure to achieve their target, right, in this context. And then, because case study indicates a lot of problems with the supply chain, they are going to acquire vertical integration. That is the question of CASriLanka come into the picture, CASriLanka Pharma. Again, from a risk perspective, this can be a big topic. The risk of, please write, risk of misstatement in a consolidated financial statement. What are those risks? So imagine from an accounting perspective, they will say they are going to acquire. This is going to be an acquisition or a merger. Let's say acquisition. Now you apply SLFRS 3 as well as consolidation standard, the business combination. The biggest risk to the balance sheet is that your fair valuation of what? Identifiable assets and assumed liabilities. So that requires assumption and judgment. This is the answer you can write if examiner talks about risk in the consolidation process or in the consolidated financial statements, especially with this acquisition, if it is coming as acquisition. The second thing is the goodwill, whether goodwill need to be impaired, right, based on, because this company, if you look at this company is performing above the industry or below the industry? Below the industry, right? So there may be cash generating units which are making losses, right? So generally, if you look at the information given, right, so they are making profit, but they are well below the industry margin. GP margin 9%, NP 3.6. This margin is relatively lower compared to the standards which are about 30-40 of GP, right? And then NP is about 8 to 15, whereas this is 3. So low, right? So that suggests that they need to really do a lot of work to turn around this company. So those are the information in the case study. And then obviously when you look at balance sheet, I mean, you don't have a lot of comparative information, but you can read some of this information. And like I said, now when you go through the balance sheet, you will see, Okay, let's take a quick look. Now after this I am going to how you prepare for this case study, right? How you allocate your time, what topic should you study, because I have given you a lot of attention to some of the sensitive information in the case study. Now from a financial statement perspective, let's see. Yeah, here CASriLanka. Right, so look at the information given. Right now, be careful, this is unaudited console accounts. Right now, when you look at the consolidated group companies results, again you can calculate your basic ratios and all and see, for example, the margins, right, whether it is within the industry or not. You can do all of this groundwork now, but the information given to us is primarily on the group and the company. So the last year, how their performance, whether it is deteriorating or not, is not line by line. We don't have that information, right? So this is basic information. And then when you look at the balance sheet, right, and there is a revaluation this year as well, which you need to really see. That is an inherent risk, right, because it involves fair valuation. And then in the balance sheet, basic thing, if you look at, there is right to use of assets. We need to make sure this is properly accounted based on the leasing standard using. Those are general answers, right? So you can, and then the inventory, what we discussed today, right, this is a significant balance. And also from a P&L perspective, revenue, the cash, and then what they are recording under financial assets, amortized cost, also we need to really see, because that's a significant portion, right? And then revaluation we discussed. So that is regarding this company. And then obviously under balances you have so deferred tax, significant amount. So deferred tax again is a area potentially there can be misstatement. Then I mean you can't read a lot of information technically because of limited direct information in the pre-seen. However, with the unseen, some information will come, right? So this is that CASriLanka PLC, where examiner has given that this is performing well below the market, right? So those are informations, and then obviously their balance sheet. Now imagine this is 31st March, right? 31st March accounts, and then you have the consolidated statement 31st March. See, if in this acquisition, risk of misstatement specifically, right, the fair valuation of assets and liabilities with this deteriorating conditions, right, if there is a goodwill, the chances of impairment, those are things that you should look for from a risk perspective. Now, going little deeper into the areas that you need to prepare for the exam. So this is very, very important now. What examiner can test now, I already mentioned to you, but to tell you in plain English, right? Now some of you don't know there was a syllabus change, and then the examiner, the intention was to say this is not auditing paper. But a lot of students don't know this. Where is this? A lot of students are unaware. 25% of the syllabus we are talking now under risk of misstatement, right? Now these questions examiner can ask. The risk of misstatement. Now look at this case study, what we discussed so far. Remember, if examiner is giving any question, it has to be based on one of these LO. So then when you go through the LO and apply to the case study, any of these I can answer, which means you will definitely get that marks. Now then, this is to understand in this case study, how are you going to interpret, right, the inherent risk and control risk. Now, for example, revenue recognition has the highest inherent risk. And then cash inventory, those you will list. And even both inherent risk, control risk high means the ROM is high. Then, how are you going to use assertion in this case study? You need to be aware about cap cover. So I spoke to you today about completeness of revenue, cutoff of revenue, whether this billing actually happened, whether this was occurred or fake transaction, whether those receivables are actually exist in the balance sheet, right? And whether company has a right to recover those receivables, whether PP is impaired, whether goodwill is impaired, valuation. So this language you have to speak if there is an exam question about ROM. And this is yellow. And if examiner wants to use this, now the question I gave you is this. This is මේක තමයි ලොකුම ප්‍රශ්නේ අහන්න පුළුවන්, right? How significant business risk? Now in this company, what are the business risks? We spoke about cyber risk. We spoke about the intense competition, right? We spoke about, all are the business risks, right? The supply chain disruption, substandard medicine, all of this, right? So how this risk is going to result in a, see, business risk becomes a ROM. This is the most critical part that can be tested in the exam. අනික ඒවා conceptual. So මේක test කරද්දිත් again you have to use more than auditing, risk management lens. දැන් මේකේ auditing standard එකක්වත් කියලා නැහැ, right? What it talks about business risk and ROM, how do you identify using the risk assessment of the CASriLanka framework and fraud risk indicators which we discussed today. So we spoke about these three, right? Incentive pressure, opportunities, attitude or rationalization under two buckets, the financial reporting and misappropriation of asset, MA, right? So those are the very important area that now then මේක මෙහෙම කිව්වට ඔයාලට තාම පැහැදිලි නැත්තම් මේ විදිහටම කිව්වා ගිය පාර එක්සෑම් එකේ. හරි? ගිය පාර telco case එකක්. There is a paragraph in a big way examiner has said this is telco and auditors had given a key audit matter regarding revenue recognition that came, and I emphasize students the same way, right? This is what examiner asked last exam. කවද paper එකද මේ? June. දැන් ඔයාලට පොඩ්ඩක් බලයි මේක වැඩියෙන් අවධානය දීලා නේද? June 25. So you are in December. Okay? Question. I told you this is not auditing paper. So don't waste time to read auditing standard or any longer thing. අඩුවෙන් වැඩ කරලා වැඩියෙන් ලකුණු ගන්න. That's what is important. So, as the CFO of the company, evaluate the risk of misstatement. The method business risk කියන එක use කරන්න. But in your case study, examiner can add the word business risk. Here directly asking ROM. ROM in the financial statements. 10 marks. See, that's big. Very easily you can get this 10. Very quickly you can get, because the pre-scene has a lot of information to get this 10. Right? Other obvious question always in this paper, they are very interested about audit committee, right? Now this time they are asking both audit and risk committee, are you aware? Listing rule, new listing rule and corporate governance code both talks about now risk committee. So can you combine audit and risk committee together? What they have to do? So risk management examiner can test because it's in the corporate governance code and it connects to board of directors responsibilities. These new areas can come. Okay. Then now I am going to actually in hospital in Sri Lanka. So in my study before this lecture, this is what is generally there. Now this is Navaloka, right? Very, very important to see how auditor has given a CAM. What is the CAM? Remember, even CAM is a part of your syllabus in somewhere. There is one topic in your syllabus, one learning outcome, the communication between audit committee and TCWG. How the TCWG can those charged with governance, communication with external auditor and the TCS. So external auditors usually communicate, right, some matters out of the matters which are mostly significant. What is the word? Most significant matters are called CAM. Most significant, and these most significant matters can relate to, significant judgment, significant risk, or significant changes. And here, according to this, now look, right? So the CAM they have identified is what? Revenue recognition, right? Why? Because we know that inherent risk is very high. But here they haven't given much information, right? They say given the significance of the value, number of transaction, judgment, time in of recognition. Now, time in we discuss, cut-off issues, revenue is CAM. But if you were to write a CAM with more specific information for this case study, you could. The way you could write, because of the disintegration where multiple systems connect information such as channeling system not being integrated, there is a high risk that the revenue is not completely recorded, and inability to reconcile the revenue with billing, impacting the cash, right, and giving rise to fraud. Solid answers, right, very specific. That's how you need to write. And don't worry, I'll do another session where I give you a paper, right? Few questions. Paper එකක් කියලා ලොකු paper එකක් පැය 3ක එහෙම කරන්නේ නැහැ නෝවාලා, right? So we'll put down some specific questions, and then I can give you early for you to write down the answer, and then we see how the answer can be generated. So remember, one student wrote revenue recognition, but I asked you how to write the answer. So the writing is critical. Based on what you write only you will get marks. Then this 3 lines model is very important even in your syllabus. There is one learning outcome added newly which you may not know again. How to structure internal control responsibility, please write. That is a new LO. I don't think it has been recently tested. High chance of being tested, right? How do you suggest risk and control responsibilities can be structured? You can use the 3 lines model. The first line is where who is responsible directly. Those who are running the business, say in a hospital, the manager in the revenue function, whoever doing that work, first line. The second line may be the financial control or risk control, the risk management. Third line is the internal audit. So that way you need to understand. See here, business line management, the first line, this defense is wrong because new model used the word only first line. Right? The second line is usually risk management. Even CFO sometimes can play this second line role, and third line is internal and external audit. Ideally, technically, it's in external audit, internal audit, right? Will play the third line role. So that's very important. Now, this is one possible topic. And the other area is, now I'm taking actual example. This is Navalok, right? Not only Navalok, I'll also show you Durden's. Right, now that's very important for you to understand risk CFO's perspective. If examiner asks this question, business risk versus ROM, there, see, these are the top business risk in hospital, clinical and patient safety risk, top risk, because if this happens, huge reputational damage. See, reputation and loss of market share impacting revenue and profit. Right, if they fail to deliver high quality care to their patients, right? That's the top risk. So, and then the other thing which is given in your case study is IT and cyber security, right? Possibility of cyber security breaches and threat to compromise in confidential patient information, and this connects to Data Protection Act like we discussed today. Possibility of system failure and breakdown. So now question is how these can result in ROM. The answer you write, you have to explain that, for example, these two can result in breaches, and then this one can result in a lawsuit, contingent liability or provision, and cyber security can result in breakdown in system, and it can have a pervasive impact, and those are called financial statement level risk. If there is a cyber attack, it can create what risk? So remember, there are two types of ROM. One is assertion level ROM. Now what we discuss under revenue is assertion level, revenue completeness cutoff. The other one is financial statement level risk. Now if there is a cyber attack and where your entire system is going to be crashed, that has an overall impact on the financial. That way you can link cyber risk, right? And then obviously reputational risk, and as a result, say the customer base reduces, that can create fraud risk. Then this is from Durden's latest annual reports, how they have identified same risk, right? Patient safety and clinical risk. You see the risk, this is called now in future risk management, like I said, is a subject in chartered, right? Risk is a very, very important subject. So because everybody is interested to risk, if you want to run a business, you need to ensure that risk is well managed. If not, you will not be able to navigate the business in the face of uncertainty, and you will not achieve your objective, which are not only financial, reputational, right? Not only financial, there are many other objectives, retaining talents and protecting company's image, all of that. So from a risk perspective, look at this environmental risk is very, very important. This is where SLFRS S1 and S2 comes, right? Very important, highly examinable. And fraud and corruption risk. Why corruption is very relevant this year, right? Not because of only new government. Like Data Protection Act, be aware about Anti-Corruption Act is impacting private organization. And if you examine anything in that nature from an internal control perspective to ensure that company complies with laws and regulation, you need to have some awareness about these two acts. For example, Data Protection Act requires appointment of data protection officer, and to do a data protection impact assessment, and to implement controls where you protect, where you get the consent of the employees to disclose the information or use information only for the relevant purpose, and then you have controls to ensure that you don't leak employee information, personal information. Now that is summary of Data Protection Act governance perspective. Similarly, Anti-Corruption Act, private organization, as a private organization you need to ensure that nobody influence anybody, including government officer, by inducing them through bribes or kickbacks. Then even directors are responsible. These are basic things you must know, current regulatory environment, right? That can directly impact areas like hospital, this drugs and all of that. So, see the fraud and corruption risk, right? So, especially this is very high in procurement fraud, billing irregularities, the unethical collaboration with third parties. Say some pharmacy come in and give in a bribe that ask your doctors to only prescribe this, and that can come as ethical issue. So those are the hot topics where you can really connect, right? And see the IT and IT risk we discuss, and then hazardous, catastrophic, pandemics. So those are the business risks, right? Then if examine us anything about in the governance structure, right, where now you are supposed to advise this hospital to streamline their governance structure. That's the part of the syllabus, although you don't know, right? So 3 lines model we spoke. Now look at in this this is where governance functions reside, right? Now we have typical committees, the audit committee, remuneration committee, related party, nomination and governance committee as per listing rule. In addition, they also have a specific committee called this one, medical and clinical care, right? Under that risk management, medical ethics committee. This is very unique to hospital. Medical audit committee, see, separate audit committee, right? And like that, because of the hospital business model, these are required. And look at where the internal audit is directly reporting. Now in this case study, this part is missing, right? We are not clear. So those are very important. And then again, this hospital, what are the key audit matters? Revenue, again in Durden's also. Revenue is specifically, the reason they have given is similar because a number of transaction, judgment involved, timing, very similar, right? CAM given, right? Maybe same auditor, right? Okay, so the other area that I need you to focus, remember this today's session is a big, what? You have to now awake. Wake up call. How to get the maximum marks and get the prize for this subject. Adu කාලෙන් වැඩි වැඩක් කරගන්නේ කොහොමද? So what are the topics that you need to specifically navigate? From the pre-scene, what are the questions that you need to prepare? Right? That's our plan. So now this one I took specifically from sustainability angle. So remember, you need to demonstrate some understanding about these framework. GRI, right? And then integrated reporting, and then finally SLFRS, S1 and S2. This is future, huge demand for the sustainability professional now, because which is connecting with financial statement. Now if you look at S1 and S2, it talks about financial materiality, the SRRO that is going to impact the company's cash flow, right? Prospects, company's cash flow or access to finance. Anything that is affecting the cash flow or access to finance is defined as SRRO. That investors are interested, and that is why it is called the financial materiality. Whereas I told you GRI, the focus is what? Impact materiality, what matters to stakeholders, right? Mostly impactful topics. So hospital, for example, one big topic is waste management. You see, now here waste, this your case study has given the same story here, no? How waste is categorized, and then how it connects. See the impact materiality topics, right? Now this is more from an impact materiality perspective. They are talking about how they manage the impact. So one of the impact that is created, the impact area is water, wastewater generation, right? And then they are also connecting that to capital, how it is connecting to natural capital from integrated reporting perspective, human capital, right, manufactured capital and so on. So now see value driver, on-site wastewater treatment plant. That is one of their value driver when it comes to natural capital, right? So the waste, my point is waste is or water usage is a material topic for a hospital. And it will not be a material topic for a bank. That is where you do the materiality assessment in GRI standard. Whereas here you use 6 capital model to understand the company's business model and how companies creating value using the 6 capital model. Whereas in S1 and S2 you use what? The SRRO. So what are SRRO? You need to really understand. So we will talk if possible today or in my next revision, right? Which I will give you question for the pre-scene, like suggested, I mean possible question. Now another possible question more specifically that you need to prepare for the next your exam is how do you apply CASriLanka framework to this case study? If there is exam question that you are supposed to strengthen internal controls by applying CASriLanka framework, what is your answer? So brush up your knowledge about the CASriLanka framework and the 3 lines model. So the CASriLanka framework in this case study, how you evaluate, right? Now for example, control environment, these 5 things, are you happy about these 5 things in your case study? How about this company's integrity and ethics? For example, do they have code of business conduct, right? And do they have whistleblower mechanism, right? Whether the board of directors set the tone, company's values, and are they adequate independent directors? We saw one director is not independent, like that. Are they attracting talents and so on? But in this case study, what is more prominent is lot of risk, right? Many risks are there, and the fraud risks are there in this company, and there are going to be changes right? And then what is in that context more relevant is what are the internal controls that you need to focus. For example, what are your suggestions on revenue recognition? Now, not only risk, if you examine us, what are your suggestions, recommendation to improve internal controls, the reconciliation, integration that you can speak, right? Internal auditing. And then IT control. See, general IT control is a critical area in the course of framework. Now, we have a problem in this company about general IT controls, right? And then this part is about the information, and internal audit also we have a problem. The last 17 principle relates to 16 and 17 relates to monitoring, and monitoring usually associated with internal audit, and that is silent in the case study. So the course of framework, how you apply to this case study, is another important aspect. And then how do you evaluate risk management role of the board from a corporate governance perspective? If examine a test the risk management, because the corporate governance code specifically now requires new principle to have a risk policy for the company. Not only policy, and to have a framework, not only framework, and to have a process of risk management. And there, more specifically, the board, the company need to have a risk committee. If there is no risk committee, audit committee take over. So specifically, while the board has, now there are three options. The entire board can manage the risk, right? Or else they can have a dedicated risk committee, right? Alternatively, they can actually combine this with the audit committee, right? So this is where it says the board should establish a committee to oversee risk management. That's the main one. Alternatively, the entire board take up the role, right? Or another one, allocate certain aspect of risk to other committees. Good example is audit committee. 3 members should be there, majority should be non-executive, and then chaired by an independent director. And then if it is a listing rule says specifically, if there is no separate committee, the audit committee should perform the risk committee's function, right? See, this is very, very important. I hope you are aware about listing rule, right? And then this is very, very important, page number. Now this page number you must read now. Page number 42 and 43 of your corporate governance code you must go through, because this case study talks about cyber risk. So there, the board should have a process to identify the business model in a hospital, the various IT devices which are connected, and accordingly identify cyber security risk, right? And then whether there is a CISO being appointed with the expertise and authority, and then whether company has a robust cyber security risk management process, incident reporting system, vendor management, disaster recovery, and a governance structure. Extremely important, right? And then auditing, right? The audit, in IT auditing, and then have they taken a cyber insurance? Now this paragraph is critical because it put down all the measures that are required, and whether board allocate adequate time on cyber risk management, right? And then effectiveness of who is going to evaluate whether cyber risk management process is effective through the assurance. That's where the internal audit comes in. So very, very important. This page can be useful if examiner test cyber security. Another question, right? If they ask whether this company's board of directors are effective, can you write this answer, right? And then how to evaluate the effectiveness of the board. This framework is very, very useful, very powerful, right? And that is from your study text, page number 820. So I am going to discuss this in a detail, probably with our case study. But right now, do you think that board, what areas board may have done well or not well? Probably we have to question. Now see, board of directors day-to-day basis, what they are doing internally is to monitor and supervise management. If they have done this, all these problems that we see in terms of system integration, discrepancy, those problems should not be there, right? But there are problems. So there is a question mark. And do they have adequate? The other thing is external financial statements, are they doing properly? That is their accountability. And then future perspective, what board is doing. For example, maybe this company is having a strategy to integrate. That strategy formulation, knowing the risk, and then the policies. So this is very, very important, because in your syllabus there is a topic about evaluating the board functions, right? And maybe I can discuss that later. And this is a reminder to you that you must be aware about new listing rule when you prepare for the pre-scene. Specific changes I have summarized here. Separate chairman should be there for board committee. The company's chairman cannot sit in all the committee. Every committee should have a separate chair. Fitness and proprietary of directors are defined in terms of their age, and if any director is found to be unethical, those are there. So, one question from Samira says, is there mentioning about it? Please, I really like you to ask question. Otherwise, this is a dead session. No, if you don't ask questions, right? So, his question is, there is a mentioning about human capital in the pre-scene. So, is there a possibility of question will come about multi-capital approach? Basically, you have to see Samira highest possibility, right? Now, although the word human capital is used, don't too much worry. If you examine a Worms, multi-capital approach can be tested, but there are much bigger topics that we have discussed, many topics that can be tested. Now, you can put 50 areas, but can you tell me top 3 things that can come with a 90% probability? That is how you have to look at it, right? But to direct answer to your question, be aware about multi-capital approach. Examiner can ask, but more than that, there is a possibility of asking this, because this year this is mandatory, and this is your open book again. SLFRSS 1, emission, scope 1, 2, 3, have basic understanding. Climate risk management in a hospital, right? What are the chronic risk, acute risk, and how they have identified those risks, right? What are the transition risks that is relevant when they transit to a low carbon economy in terms of reducing their carbon footprint, right? So those basic stuff you need to be aware. That is mandatory from this year. SLFRSS 1 and S2 SRRO, right? Multi-capital, yes, you can study, but the possibility of directly testing only that, I can't say high, right? In my view, not high. So to directly answer you, then if you look at some of these key changes to independent criteria in the new listing rules, so very important for you to go through, right? So these are some of the changes. So if I tell you something specifically that you must note, which I am emphasizing here, this code of business conduct and ethics are very relevant. Risk management added, ESG policy and sustainability company should have, and whistleblowing. These are policies that company need to have as per listing rule. And then the other thing is regarding board balance listing rule, specifically say if you combine CEO and chair, this case study is not relevant. And then SID's role has to be prominently mentioned. And remember, you might get a new question in the exam from corporate governance. Need not to be this case study, right? And therefore, it's important for you to go through, because corporate governance and sustainability has 15% of your syllabus, right? Then board diversity, it has spoken about. Maximum number of directors. And yeah, this we discussed. So the other big piece which I now emphasize is sustainability, right? So this is where specifically from this subject, right, level B examine is tested, not at very high level, but some level. The biggest, highest chance, when I did the last pre-scene, I told students this is the one that has the highest chance of being tested. Evaluate the role of the board. And I had the same slide for last batch also. I'll show you the slide. this slide, and I told students this has the highest chance of being selected, and this is the exam question. Evaluate the role of the board in overseeing sustainability related risk and opportunity with respect to S1 and S2. See, lot of emphasis given and tested. This is why students were happy, sir, right? That maybe one lecture made a big impact. So similarly, I am unhappy there are a lot of students in my course, but they are sleeping now. Maybe they are planning to watch this video later, right? I could have done this during the weekend, but then there is a time for you to prepare during the weekend to do your self-work. Remember, most powerful thing is working with you, not listening. Listening also important, right? Then you have to, your brain has to understand, you need to internalize, and you should be prepared to answer. Write your own answers, right? This is the question. So sustainability, S1 and S2, fundamentals you must know. So fundamentally, within 5 minutes, right, the main thing in S1 is to identify sustainability related financial information, right? See, financial information, and that is about SRRO. So what are the SRRO? So the whole standard deals with SRRO, right? So then what are SRRO is your query, right? Disclosure about sustainability related financial information means what? Sustainability related financial information means information about SRRO. SRRO means anything that is going to affect the cash flow or access to finance or cost of capital. Now imagine this hospital is discharging waste in a very irresponsible manner, and the government stop them operating. That's a huge impact. No, they can't run the business. That's a huge risk. Now, another thing, due to some environmental climate conditions, some of the medicines supply, there is a shortage. Now, how do we know what are the SRRO in hospital? Very easy. Remember, there are 70. This is only 2 standards. But to identify SRRO, there are 77 standards. Those are called CASB standards. At least understand now, CASB. Right? How many CASB? 77 industries are there. And then hospital sector, there is a CASB, and you can go through and see what is material for a hospital. And obviously one of the topic can be what? What we discuss now, right? Supply chain, medicine, right? Now due to climate impact, now some of the medicine in the places that you are buying, is prices going to go up, and that is impacting your cash flow, and that is SRRO, right? Like that wastewater, if hospital is going to release in a irresponsible manner, they are in trouble, huge risk. Non-compliance, that is SRRO, right? So SRRO means that. Then not only that, S1 requires you SRRO ටික නිකන් දාලා වැඩක් නැහැනේ. How are you going to govern that? How it is connected to your business model, that strategy and financial. How it is connected to your risk management, and what are your targets to cut down the emission, for example. Those 4 are called governance, strategy, risk and target. So remember those 4 words. හොඳට මතක තියාගන්න. S1 and S2 කතා කරොත් ඔය වචන දෙක නැතුව කතා කරන්න බෑ. එකක් SRRO, අනෙක් වචන 4 මේක. Governance, strategy, risk management and what is the word? Matrix and targets. This is the S1. S2 is about climate risk. Specifically, what are the climate risks? I mentioned to you earlier, physical risk. Suddenly, now see the climate today, this week, right? So suddenly there are going to be what? In Sri Lanka, it's going to India now. What is it called? Hudhud or something, right? Cyclone. So there's massive impact due to a sudden climate risk. That's a physical risk. How it is impacting? Imagine this is going to impact your one of your factory which is located near a flood prone area, wherever. So now you can't operate. Huge risk, right? So there are some questions, I'll answer those. So remember, this SRRO really important. I have a picture for you to understand SRRO. Picture ko balu gawan thereno, so don't worry. And the other thing I already covered you, that GRI and S1 and S2, what is the difference? This is about financial materiality, whereas GRI is about impact materiality, right? So now, this is what is critical. This is what I emphasized last exam. This is what was tested in the last exam. What is board of directors role regarding sustainability? Terrible. 5 how question. How කියලා තමයි අහන්නේ. Question 5ක් තියෙනවා board එකට කට උත්තර නැහැ. That's why there is a demand now in Sri Lanka. Lot of companies are start recruiting people now. They have to, top 100 companies have to prepare their, connect their S1 and S2 to the same financial statement, carbon accounting, right? And identifying climate risk. The first standard to implement in Sri Lanka this year. So the board, මම කියන්නේ how කියලා පටන් ගන්න ඔක්කොම. බලන්න පළවෙනි එක, right? How the responsibilities. Now the first, before coming to how, maybe how 1, 2, 3, 4, 5. 5 hows, right? So 5 how දැනගත්තා නම් you can score. Right. Now the first thing is, the standard says the board of directors, right? They need to have, the user should be able to understand the governance process, that is with the board of directors, controls, procedures, to do what? Monitor, manage and oversee SRRO. So this is SRR. I think I had that slide. Unfortunately, it's missing. Yeah, that slide. Maybe I will cover in my next slide, but to tell you, there is a SRRO slide that, let me see. No. So the SRRO arises from, so I can tell you, I don't need a slide. So please make a note. SRRO arises from 2 things, right? Dependencies, very, very important, big word, right? Dependencies, organizational dependencies and relationship. So this is, even in integrated reporting, you have relationship capital, natural capital. For example, if hospitality depending on water is definitely required, right? And then some certain type of pharmaceutical item which connects to nature, right? So that material is not available means in future, that material prices is going to go up. There is a scarcity. That creates a SRRO. Oh, this hospital is buying from a supplier that has a corrupted practices. That is SRRO because you are having a bad relationship. So it arises from dependencies and relationship and impact created by the organization. Now, unfortunately, now imagine there is a drought. So these are, we call outside in. Outside in. That means what is happening externally impacting the company. You are not doing anything wrong. That is outside in perspective. So SLFRS S1 and S2 about outside in perspective. The other one is impact created by the company. So imagine they are releasing wastewater, that is also SRRO. So this is what is called SRRO. Right? So now board of directors role is actually, now 5 hows. One is how these responsibilities for SRRO are discharged, right? How responsibilities are reflected in terms of reference. So which committee, which charter, this is in one word charter, which board committee is dealing with this responsibility. Then how this board, audit committee or sustainability committee decide they have the skill and competencies, right, to monitor SRRO. Why? This is a technical subject. Now director who has no idea about SRRO, SASB standard, no scope 1, 2, 3 emission, no GHG protocol, even you are not, some of you don't understand, right? So then they have a knowledge gap. So how they are going to fill the knowledge gap? And then how this SRRO, is it coming to the board? Oh, whether board is only looking GP margin, NP margin. Are they looking their carbon footprint? Are they looking unauthorized waste disposal? So then are they looking SRRO as a part of their strategy and decision making? And then how they set target to reduce their emission? These how questions are very, very important, right? And this is what examiner tested in the last exam. So I can cover this in more detail in my second next. Then S2 standard talks about these two risks that I spoke: physical risk, transition risk. And remember, it's not only risk, opportunities, right? Risk and a negative, opportunity positive. Now a lot of demand for sustainable products. Now in a hospital, if hospital can come up to say that, look here, that the way we treat a patient or water utilization in our hospital is this, and our, you are creating an image that you are the green hospital in Sri Lanka, right? And also you are using medicine. I am just telling, now you are promoting like that. You are using medicines that has less harm, side effects, with lot of research but expensive. So you have a unique business model, and you have opportunity to get more rich customer, and that new business model you create, that is an opportunity in the green market. If you look at some other business, see the garments made with less environmentally friendly, lower chemical utilization, no forced labor, no child labor, can demand a premium price. That is why a lot of companies and garments, they traceability is a big topic in sustainability, like that. So that all, it is impacting your accounts, right? So that's about S2. So this is not a time to go through in much detail, but in my next session, I'll give you some coverage about, to get marks. Specifically, this is very important, but sustainability kata karinda mega kata nokara yanna bෑනේ. Now can somebody tell me what is scope 1, 2, 3? Use the chat to test your knowledge. So what is your understanding of scope 1, 2, 3? Can somebody write, this is scope 1, this is scope 2, this is scope 3. This is the S2, which is climate risk. It's risk. බලමු එක්කෙනෙක්වත් දන්නවද කියලා. ඔයාලා ඉන්නවද නැද්ද? Yeah. කවුරුත් දන්නේ මේ scope 1 emission කියන්නේ මොකක්ද? scope 2, scope 3. ඒක දන්නේ නැහැ කියන්නේ essence එක දන්නේ නැහැ. බලමු. I asked what is scope 1 emission, scope 2 and scope 3. No. So imagine you have a factory. So how emission, now climate risk is what? It arises from emission. Which emission? There are many, right? So, but carbon dioxide is the more prominent one when it comes to emission reporting. All other emission like methane also converted to carbon dioxide according to greenhouse gas corporate accounting standard. So IFRS recommend or SLFRS recommend using greenhouse gas, right, corporate accounting standard. That talks about accounting for scope 1, 2, 3. No one of you mentioned now, no one is properly answering. Either you don't know, you don't answer. Remember, scope 1 is what you burn inside your factory. So you have a factory, you use fern soil and do some operation. So that is scope 1 emission, the emission coming from scope 1, one category. Then scope 2 is emission that you purchase from Ceylon Electricity Board, or some companies even purchase steam from another company, that is scope 2, right? Scope 3 is very complicated. There are 15 categories of scope 3, right? See this? How interesting, right? This is with pictures. Scope 1, company's facility, within the company's facility, and company's vehicles using fuel, direct. Whereas scope 2, I told you, is about the purchase electricity steam for heating or cooling purpose for own use. And I told you scope 3, these are the how many categories? 1, 2, 3, 4, 5, 6 sulfur, right? Nitrogen oxide, methane. So all these 6 types of emission you have to account. There are calculations, emission calculation using emission factors. It's all calculation business, right? That's why this is very, very demanding. So I can show you emission calculation using formula, right? What is your energy level, right, in gigajoule, and what is your emission factor, which factor to use, and what is your global warming factor, and then calculate and report your emission, right? So scope 3, I told you 15 categories, right? What are those 15 categories? Starting from raw material that you purchase, which means you have to now monitor how your supply is going to burn, right? If it is a hospital, now medicine supplier, how the supplier scope 1 becomes your scope 3, right? And imagine your employees are going business travel, each air ticket, now some air tickets now they issue this is the emission, so you have to account for it, right? So your business traveling and employees going home using their vehicle, that also counted. Anything outside your boundary scope 3, including your investments, right, lease assets. And then now imagine this garment, denims, Levi's denim. Now how many times consumer is washing this? Each time emission is generated, right? You calculate that end of life treatment of sold products, right? Processing of sold products, transportation, right? When you export the containers going from here and there, from here to port, all that emission you have to account. All calculations, huh? This is why another calculation subject which accountants are not thorough now have come to marry accounting with sustainability related financial information. Huge opportunity for you, right? Beyond exam, but exam also this can count. So I think that's what I want to say today. And so with any other questions, I will answer these questions. So the next session, I'm going to actually give you some questions. Maybe before the session also I can pose these questions. Please ask questions now. Let me see your questions. Good, some of you have asked questions. So one student has asked, sir, do we need to use this open book? Yes. And now that is the benefit. Some of you don't know. Now see the chat. You can take study text chapters to the exam, right? Especially these 3 chapters, the true and fair view, going concern, and internal control framework. It is allowed as open book material. And 3 lines model that I spoke, all that is in that document, right? Yeah, we can use that book. Then, is there any possible question to connect those 4? What is that? Those 4 contents with case. I don't know what that means. You have to explain. Climate I covered. Can we use open? Pre-scene. At that time I don't think you are allowed to take a hard copy of pre-scene. Please check with CA. Usually you don't. Open book you can take, and anyway same pre-scene you will get. But I doubt what you highlight and make notes. I am not very sure. Better check that. Right. Any other questions? If you want, I'll check and put it to the WhatsApp group. So please. You have access to me through the communication, ask questions, clarify anything and get the maximum. Remember, don't neglect this area. If you want to be the prize winner in ABR, I don't think there is a prize winner, maybe one. This area is crucial, right? So I will probably cover in the next lecture some of the area which I didn't touch today, ethics and maybe other aspects of corporate governance, and maybe we'll write some answers based on this pre-scene. So with that, if you don't have any other questions, we will conclude this session. Thank you. I hope the session was useful. So now you have to be very active and prepare for not only this pre-scene, but less more strategy, less time, most impactful areas you will study. Thank you.